Okay, all right, Jitendra, I request you to stay with us. We're going to come back to you. We want to continue this chat. But for the time being, it's 3 p.m. and we have Nimesh who's joining to tell us what he's making of today's fall. Nimesh, what's the feedback that you're getting? Sulbi earlier alluded to the fact that it may or may not be institutions, who are selling a lot, but it could be more the domestic hands. What are you picking up?
So, Nigel, three things which a lot of markets have been talking about and focusing on. One, is there a very large FIS selling? The answer to that is no. Okay. I haven't heard any large basket selling or an MOC sell flow at any large institutional desk. So, there is selling. Of course, that's been the data which has been showing up. But there is not very large selling which suggests a 300-point cut on the Nifty or 3% fall in the broader market. So that's the FI part. Yeah. The second part is, are there redemption pressures in domestic mutual funds? Even to that, the feedback seems to be that there are no any signs of redemption pressures in the mutual fund industry, so to speak, as we speak, right? Good. The only thing is, from the DI point of view, from the domestic mutual fund point of view, the participation has slowed down clearly. I was talking to some large institutional desk, and the feedback is, if they offer or show a 10 lakh shares of bid, the bid is only for 3 lakhs or 4 lakhs. So clearly, from the mutual fund side, the aggression to buy in such a market is slowed down clearly. So even that is impacting the stock price to some extent. I guess what we are seeing is literally a carnage in the broader market name. So looks like that's more of panic selling from retail and HNI investors, or for that matter, who are individual investors who are directly investing into the market. So that's the pocket which seems to be panicking now. The mid-cap index is down 3%, micro-cap, small-cap. The SME IPO index is down 4.5% in today's market. So that clearly shows that there is pain now at the portfolio level and even at a trading level. So a lot of people are booking the losses as well to adjust the books for the March end. So it's still far off for the March end, but still, that's the feedback that there is a bit of unwinding happening from the retail and HNI category. So that explains the flow perspective. FI large selling, no. Domestic redemption, maybe no. Yes, there is lack of buying interest from the domestic mutual funds. I guess technically, we've been saying this, right? 22,800 now is a level to watch out for. We've clearly broken the 23,300 support. Now the level to watch is 22,800. If that gets taken out, then you will see further selling or further panic in the large cap names as well. So that's overall feedback as far as flows are concerned. I guess it's more to do with the pain in the broader markets, and it looks like that's something to watch out for. But again, looking at just the data purely from the PCR data point of view, it's come to 0.65, and I've been saying for a while now that that's the level where normally we see a bit of a pullback. So hope for a pullback, but I haven't heard any big selling from FIs.
There are two factors out there. One is the PCR, the other is the FI net short positions, which has reached 1.75 lakhs. So ideally, these are the levels from where we should get a bit of a bounce. That said, Nimesh, what about individual stocks?
So in terms of individual names, the first is a couple of the new age plays, so to speak, Zomato and Swiggy. Both are under pressure today. In fact, there was a Citi initiating report on Swiggy as well, but stock is down 6%, and there is selling pressure. Aggressive selling is what I understand from larger FIs. I guess the street is a bit worried about, there could be a bill for the gig workers to be included in the pension scheme. So that could have an impact. And maybe that explains there is selling in both those names today. The second stock is Interglobe Aviation. In a weak market, that's not very down, but there is buying as well. There is small buying, but there is buy flows from larger institutions in Interglobe Aviation at these levels. But again, for Interglobe Aviation, watch out for a potential large block, because the 5-month lockup seems to be over now for the gun ball. So that's something to track there. The third name is Goldiem International. A sharp cut in that stock. Down 13% and large volumes as well. I understand there are sell-flows at HNI desk, and one leading HNI investor has been aggressively selling for the last couple of days there. And the last one is LIC Housing Finance. A lot of funds bought in anticipation of rate cut and a potential beneficiary, but now you're seeing a bit of reversal and a bit of whether you call it profit booking or genuine selling. But there is selling in LIC Housing at these levels.
Okay, all right, got it. Nimesh, thank you very much for that perspective. Interesting.